Hey everyone, welcome back to Corporate Dakota, the place where we unravel the hidden stories in the world of business finances. And let me tell you, today's story has a bit of a surprise ending regarding a company's auditors. Before we dive in, if you are all about getting to the core of what these financial filings really mean, make sure you've hit that subscribe button. We've also got a fantastic community over on our Discord server, linked in the description, so swing by and join the conversation. Alright, let's talk about FutureTech, the FutureTech Acquisition Corp, or FDI as they're known in the stock market. Today we're looking at a filing that is essentially an update on what is going on behind the scenes. It is not a full financial report detailing every single penny, but it does highlight a significant change in who has been checking their financial books. This report is filed under the Securities Exchange Act, which is basically the rulebook for how public companies share important information with investors. And the public it is like a way for companies to keep everyone in the loop about anything major that happens. Now, FDI is a company that involves different types of securities like common stock and units. These are the things people can invest in and own parts of the company FutureTech to acquisition. Corp is a special kind of company often called a SPAC, or a special purpose acquisition. Company initially, their purpose is to raise money to buy another company or merge with one. So they are essentially a blank check company waiting to make a deal. The company has checked the box saying they are an emerging growth company. This means they are a newer company and can follow some slightly different, often less strict reporting rules compared to older. More established ones, it is a way to ease the burden on smaller businesses as they grow. The big news here is about a change in their auditor. So imagine you are a company and you have a firm that checks all your financial statements to make sure they're accurate and follow the rules well. FDI just had a change in that firm. That is what this section is all about. It is like a doctor changing their specialist. On the 12th of January 2026, the company received word that their independent registered public accounting firm, Adeptus Partners LLC, was stepping down as their auditor Adeptus had been with the company since October 2021. This isn't usually a casual decision. It often signals something important is happening. It is important to understand what an independent auditor does. They are like the guardians of financial integrity. They give an opinion on whether a company's financial statements present a true and fair view of its financial position. It is a critical role for investor confidence. This is a really key phrase from the auditor's past report, an explanatory paragraph expressing substantial doubt about the company's ability to continue as a going concern. This basically means the auditor had serious concerns about whether the company would be able to stay in business for at least the next year. It is a big red flag for investors and definitely a reason why an auditor might step down, or why the company might be looking for a new one. Digging a bit deeper, the auditors also pointed out what they call a material weakness in disclosure controls and procedures. This means there were significant flaws in how the company reported information or how well its internal systems work to ensure accuracy. It is like having leaky pipes in your house. You might not see the water immediately, but it is a problem that needs fixing. They also mention a material weakness over financial reporting. This is even more specific and serious. It means there were significant deficiencies in the company's systems and processes that could lead to errors in their financial statements. These were issues highlighted in their 2023 and 2024 annual reports. Now here's where things get interesting. The company asked Adeptus to write a letter confirming if they agree with what is being said in this filing about their departure. This letter is attached as an exhibit, which is basically like an appendix to the report. You'll often see these letters to confirm that the auditor and the company are on the same page about the reasons for the change, or if there were any unresolved disagreements. This little tag might seem insignificant, but it tells us that the units being talked about are represented in terms of shares or units of ownership in the company. It is how the financial system tracks these things. And again, this tag tells us that any monetary values we'd see in a fuller financial report would be in US dollars. It is just a standard way to label currency. This section is like the filings appendix. It lists all the supporting documents that are being submitted along with the main report. This is a bit technical, but it refers to a special format called inline XBRL. It is used to make financial data easier for computers to read and analyze. This helps in getting data out much faster and allows for more detailed analysis by investors and regulators. It is essentially a machine-readable version of the report. Finally, we have the signature section. This is where the company's top executive, usually the CEO or CFO, signs off on the report, certifying that everything within it is accurate to the best of their knowledge. This signature is a formal declaration that the company stands by the information presented. Now, looking at all of this, what is the story for FutureTech to Acquisition Corp, the departure of their Auditor with concerns about going concern and material weaknesses in financial reporting is a pretty significant event. It doesn't necessarily mean the company is doomed, but it does signal that there have been some serious challenges internally. It suggests that the company may have been struggling to maintain robust financial controls, or even demonstrate a clear path forward in terms of its business. Operations, the fact that 2 sets of annual reports had these issues reported is even more concerning. These are the kinds of things that make investors pause and ask more questions. It is a reminder that behind every ticker symbol there is a business with real operational and financial health that needs constant attention and strong oversight. The auditor's role is crucial for a company's credibility, and when that relationship ends under these circumstances, it is a signal to pay close attention to what happens next. Alright, that is our breakdown of FutureTech Do Acquisition Corp's latest filing. What is your take on these auditor changes, and what they might mean for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord in the description. We'd love to have you there. Thanks for watching. See you next time.